we like buying businesses where we feel that there's some untapped pricing power. We haven't been able to do much of that lately. But back in 1972, when we bought See's Candy, I think it was either, was it $1.95 a pound?
Something like that. Yeah.
And they were selling 16 million pounds of candy a year, making 4 million pre-tax with about 25 million purchase price, which I would have very foolishly refused to budge on, and in history it cost us a lot of money. But one of the questions we asked ourselves, and we thought the answer was obvious, was, if we raised the price 10 cents a pound, would sales fall off a cliff? And of course, the answer, in our view at least, was that no, there was some untapped pricing power in the product. And it's not a great business when you have to have a prayer session before you raise your prices a penny. I mean, you were in a tough business then. And I would say you can almost measure the strength of a business over time by the agony they go through in determining whether a price increase can be sustained. And frankly, a good example of that is the newspaper business right now, because 30 years ago, when whatever the local daily would be had an absolute lock on the economics of the community, because it had the megaphone through which merchants had to talk if they were going to get their message across to their audience. At that time, rate increases, both circulation and advertising, were something that were almost a big yawn to most publishers. They did it annually. They did not worry about the fact that Sears or Walmart or Penny's or whomever would pull their advertising. They did not worry that people would drop their subscriptions to the paper. And they went merrily along, increasing prices, and they increased them when newsprint went up, and they increased them when newsprint went down. And it worked. And you got these very fat profit margins, and it looked like about as strong a business as you can imagine. Now publishers find themselves in a position where they agonize over rate increases, both in advertising and in circulation, because they're worried about driving away advertisers into other media, and they're worried about people when they get a 20-cent increase, per month or whatever it may be, in their circulation price, just deciding, well, I think I'll just drop it. And when they drop it, they don't usually take it up again. So that world has changed, and you could recognize the change in that world simply if you could get inside the mind of the publisher in terms of how they felt about price increases. You can learn a lot about the durability of the economics of a business by observing the behavior of the price behavior. I mean, you're seeing that. We're talking about the beer business. The beer has moved up in price every year, but there have been some rollbacks in certain areas in the last year, which means that it's getting a little bit more difficult to increase prices, even though they increase them at rates below inflation. And that's not a good economic sign. Charlie?
I have nothing to add to that.
We bought Petrochina a few years ago, again after reading the annual report. And fortunately, it was in English. It was the first Chinese stock, and really the last. I mean, it won't necessarily be the last, but I mean, it's the only one that we've owned so far. We put about $400 million into it. At the time, and still, it produces about 3% of the world's oil, which is a lot of oil. It produces probably 80% or so as much as ExxonMobil will produce. And it's a huge company. Last year it earned $12 billion. Now, if you look at the Fortune 500 list, my guess is you won't find more than about 5 companies in the United States that earn $12 billion or more. So it's a major company. At the time we bought it, the total market value was $35 billion. So we bought it at about 3 times what it earned last year. It does not have unusual amounts of leverage. In the annual report, they say something which very, very few companies do say, but which I think is actually fairly important. They say they will pay out about 45% of the amount they earn. So if you can buy it at 3 times earnings, would turn out to be 3 times earnings, and you get 45% of 33%, you're getting a 15% yield on your cash yield on your investment. It's a very good annual report. Chinese government owns 90% of the company. We own 1.3%. If we vote with them, the two of us control the business. And it's a thought that hasn't occurred to them, but I'll keep pointing it out. But it's a very major business at a very, very attractive, at what was a very attractive price. Unfortunately, the government shares and our shares have the same economic interest, but they are classified differently, so that the government's 90% are called one thing and the 10% with the public are called H shares. And we have to report in Hong Kong when we own 10% of a company, or we did then, 10% of a company's shares. So unfortunately, the 10% applied only to the 10% of H shares, and so we had to reveal our ownership when we only had 1% of the economic interest in the company. So we would have bought more, but the price jumped up, and we are happy to have our 1.3% or whatever it is, and we think that they've done a good job in running the business. They've got large gas reserves, which they're starting to develop now. But it's a very major enterprise. It employs almost 500,000 people. And the interesting thing was, a few years ago, relatively few people in the investment world probably even thought about the fact that Petrochina was over there and was a much larger business than most of just about any oil company in the world, except for BP and ExxonMobil. Charlie, do you have any thoughts on that?
Yeah, it would be nice if this sort of thing happened all the time, but that hasn't been true in recent years.
But I should emphasize, the annual report of Petrochina, which, like I say, it's easy to read, understandable, they declare their policies. Anybody could get it. You can read it. We did not go over, and we never had any contact with the management before we bought the stock. We never attended an investor presentation or anything of the sort. It's right there in black and white in a report that anybody can get, and we just sit in the office and read those things, and we were able to put $400 million out that's now worth about $1.2 billion or something like that. It was interesting at the time. I think I'm right on this. At the time, Yukos, which is the big oil company in Russia, was probably far better known among the investment community in the United States than Petrochina. And I compared the two at the time, thought to myself, would I rather have the money in Russia or have it in China? Petrochina, in my view, was far cheaper, and I felt that the economic climate was likely to be better in China. Would I have, if it had been selling at the same multiple as a U.S. domestic company, would I have regarded it as more attractive? No. There's some disadvantages always to being in a culture that you don't perfectly understand, or where tax laws can change, your ownership rules can change. But the discount at which Petrochina was selling compared to other international oil companies was in my view at the time ridiculous. So that's why we bought it. And we will have the candy available for you at the break. Number 6.